One of the big questions that's been on people's minds in the investment world, especially in crypto, is crypto dead? Over the last few years, a lot of crypto investing has been done on technical analysis, people watching charts and trends and following where the money is going, and not so much fundamental analysis, looking at protocols that are making money. And that's largely because it hasn't been possible in the past to really know what money protocols are making, because a lot of them haven't been making any money. Just like happened in the dot-com boom of the late 90s, a lot of those companies weren't making money, some purposely, like Amazon in the last 20 years, and some just were trying to find a business model, so they weren't making money because they couldn't. They were still trying to figure it out. They were just raising money from funds to figure out what kind of business that they were going to have. And the same pattern is following in crypto. So people have watched the technical analysis, tried to watch the charts, and there are a lot of amateur investors in crypto. You might be one of them, and that's okay. They just watch the charts, but that is not that trend of watching charts and trying to buy it when it goes up and then trying to sell it at the top, which is very difficult. I think is going to be something that is not emphasized as much. It's going to be a thing of the past as the professional investors or the amateurs get more sophisticated and the protocols get more sophisticated when they're actually generating revenue. Going forward, I think investors will be looking, especially after this big crash, will be looking at protocols that have fundamentals, that are actually making money. You can go to cryptofees.info and look at the protocols that are making money. Like Ethereum makes a couple of $1 million every single day. That's one thing that makes Ethereum worth something, is because it's actually making money, just like a corporation. The more money it makes, the higher earnings per share, the more valuable that company is going to be. And also it can be valued. So let's look at a few factors to determine whether crypto is dead or not. So 1 is the macroeconomy, 2 is the Ethereum merge, 3 is the flow of money into and out of the crypto ecosystem, and 4 is deals. What kind of deals are being made? So the macroeconomy right now, people are scared because we may or may not be in a recession. Interest rates are going up. The Fed is raising rates and doing quantitative tightening, and there's less money in the economy. So when there's less money, less liquidity in the system, then the crypto and also equities don't go up as much because there's not as much money being injected into there. So people are scared because it's very uncertain what's going on in the world politically, with the war in Ukraine, with Taiwan, with policy of different countries around the world. So they're taking money and going into cash. A lot of the money that was in crypto 6 months ago is now still in crypto, but it's in cash, in USDC or USDT, or it was taken out entirely. But crypto is very young. It's hard to use. It's confusing, and hacks are still happening. So anything that happens is going to have a big effect on the crypto market in the macro scene, the macro economy, and then just the inflows of institutions and people putting money into the ecosystem and then taking it out if anything happens. As we've seen over the last 6 months, as people take money out of the ecosystem and put it into cash, either in USDC or crypto cash, and or just putting into their bank and paying off debts or doing something else with it. So number 2, one thing that I think is very bullish for crypto is the merge, which should be happening next month, where Ethereum goes from proof of work to proof of stake. One of the big arguments against Bitcoin is that it's so energy intensive, and that's because of proof of work, because you've got these machines that are doing computations, solving a puzzle every 10 minutes in order to keep the network secure and do the transactions. That's been a drag on Bitcoin, as the people who really believe in ESG and environmental eco causes don't want to contribute to anything that has a large carbon footprint. That's a separate debate whether Bitcoin, that carbon footprint is as big as people say, and if it's worth it. We can cover that later. But Ethereum is going over to proof of stake, which will drastically reduce the amount of computation and energy needed to run the Ethereum network. It will reduce the energy expenditure by 99.95%, by 3 sigma, almost 100%. It'll go down to practically nothing. So that argument against cryptocurrency using all that energy goes away when Ethereum goes to proof of stake. And Ethereum turns into an interest-bearing asset, and it will likely become deflationary as opposed to the US dollar, which is obviously inflationary. It will be deflationary, and it will also allow you to stake your Ethereum and earn a return somewhere probably between 4 and 6%. So that is all very bullish because that asset of Ethereum is a multi-pronged asset where you can buy it. It's deflationary. There are fewer tokens every week or every year. You can earn a return on it, and it's very eco-friendly, and it's being used. It's generating an income. It's generating money, $1 million or so, $1.5 million every single day, and that number will go up drastically as the bear market subsides and people start getting back into Ethereum or into crypto. Then those fees will go up, and then that price will appreciate to Ethereum. So let's talk about the flows then. So I'm going to read a couple of stats about the flows. Basically, in short, money is starting to flow back into crypto. A lot of money flowed out of crypto over the last couple months during the bear market. And as I've said, money's flowing out of equities and out of crypto. But it's starting to flow back in. Over the last 3 weeks, $529 million has flowed back into crypto, with Ethereum leading the way as the top protocol with 159 million. So let's see, 6 weeks ago, 450 million went out, and now since then, 529 has flowed back in. So the money is starting to come back. People are taking their money off the exchanges, putting them onto their wallet, because that's the most secure way to store your crypto. If you've got crypto, you should be doing the same thing, putting money onto your wallet, securing it with a ledger or a Trezor or some kind of hard wallet. So money is going off the exchanges, but then new money is going into the exchanges. This isn't something that the general media really talks about. They just focus on the price of these different assets. Obviously, they're down quite a lot, 60 to 90%. They've been down, but money is starting to flow back in over the last few weeks. So that's what happened in the past. What's going to happen in the future as people start coming back? All of that volume will start to increase. It's already starting to increase. And likely the price will go up on these assets. By how much, who knows? So there's a survey was done, this is posted on Statista, that shows that in the summer of 2020, the people who planned to invest in current cryptocurrency was 11%. And this summer of 2022, it's 15%. So the amount of people that are investing currently and planning to invest is still up. It's still up year over year, even in a bear market. And you could make the argument that, especially in a bear market, is when you should be dollar cost averaging and buying when the prices are down. So let's talk about the last category, and that is adoption. Money is still flowing in an institutional way into the crypto space. In fact, last week, Coinbase announced a partnership with BlackRock, and BlackRock is the largest hedge fund in the world. They manage $8 trillion in assets under management. For comparison, the annual budget or the tax revenue that the US government collects is about $4 trillion per year. So they're managing 2 years worth of tax collections from the US government. And they said, and here's a quote, "We disagree that blockchains and applications run on top of them have no intrinsic value," which is a comment we hear regularly. So the largest $8 trillion asset manager in the world believes that blockchain has value. I apologize. That quote was actually from Bank of America. So we've got two big endorsers of crypto. Bank of America saying that they believe it has value, and then BlackRock partnering with Coinbase And that partnership means that their institutional clients, their hedge funds, family offices, mutual funds, are going to be able to have access to crypto in a much easier way through Coinbase. So that's a huge deal. And in fact, when that was announced, the crypto market pumped a little bit because it was so bullish for the ecosystem. So overall funding into US-based blockchain companies reached $14 billion in 2021, which is up from 1.7 in 2020. And so far this year in 2022, it hit $30 billion. So each of the last 3 years, including 2022 during the bear market, money is coming into crypto from VCs, hedge funds, these large institutions that are putting money directly, not necessarily trading it, but investing into the protocols, into the companies that are running the cryptocurrencies. So during a bear market, crypto is going to, the good protocols, especially the ones that are making money, are going to stick around because they have fat treasuries and war chests that they got over the last couple of years as they raised all of this money. That's 30 billion, 14 billion, and almost 2 billion. So that's almost $50 billion over the last 2.5 years that's been raised for crypto, that I'm sure a lot of that hasn't been spent. It is just sitting in their coffers so they can last during this crypto winter or recession, global recession or US recession. They can stick around and they can keep building, just like happened in 2018. The market was down for about 18 months, but the good protocols just kept building, kept shipping, and made the product better and better. Coinbase is a great example. I started using Coinbase in 2017, and it was a pain to use because it was not very user-friendly. It was very basic. The only assets that were listed on there were Bitcoin, Ethereum, and Litecoin for some reason. And now they list obviously a lot more, and they're a lot bigger. It's a lot easier to use, and they've got so much more capability. And that's going to keep happening with crypto because the crypto companies, the big ones, the solid ones, are making money, and they have big war chests that they've raised. They're very well funded. And VCs, aside from the money that they put into these crypto companies, they have raised billion-dollar funds. Many billion-dollar funds have been raised over the last couple of years. Even recently, in the last year, that money has not been allocated yet. So there's a lot of money sitting still waiting to be allocated into these companies that are going to keep crypto companies going for at least for the next several years. And these big banks like BlackRock and like Bank of America and like Goldman and others believe in crypto and believe that it's still a worthwhile investment and is going to be a big part of the future. So if you ask me whether crypto is dead, my answer is it's down, but it's not out. It will be back, and it will be back bigger and stronger than ever. So do you agree or do you disagree? I would love to hear your comments, and let me know if you think I'm right or wrong.